Hello all and welcome back. I hope you're all doing really well. Today's going to be another update video. Let's just jump straight into it. There's a decent chunk to cover today. First things first, article by the Cointelegraph saying that KB Bank to launch South Korea's first crypto investment fund. I've touched on South Korea in the past, but they are really leading. They are the pioneers at the moment in terms of the crypto space for sort of country level adoption. Obviously, we're seeing a lot of pushback in countries, for example, as the US for spot Bitcoin ETFs, but Korea just keeps surging forward and they are making a name for themselves as being one that embraces the digital asset economy that is taking off effectively. So 𝗟𝗚𝗡𝗏 Bank is preparing to become the first bank in South Korea to offer crypto investment products to retail investors. On February the 21st, it informed the Digital Asset Management Proprietary Committee to determine product and strategy capabilities regarding digital assets and artificial intelligence investment funds. The bank expects to launch crypto exchange traded funds or ETFs and futures products. The committee will also assess risk and compliance issues for the investment funds. Now, one of the key takeaways as well is KB Financial Group, the country's largest by net profit, had about 520 billion in total assets as of September 2021, according to research firm Macro Trends. So this is potentially 0.5 trillion dollars that could find its way into the crypto space. So again, this is just fantastic news in general for the crypto markets as we move and look forward to that mass adoption way out into the future. Really good news in general, to be honest, for crypto. Next thing I just wanted to say is if you guys are enjoying these videos and you're not subscribed already, as I know a lot of you aren't, please think about subscribing, supporting the videos by leaving a like and a comment. You can also follow me over on Twitter at 𝗟𝗜𝗡𝗏𝗡𝗥. I tweet a lot of the stuff that I end up covering in these videos anyway, so it kind of gives you the heads up on what I'm going to be talking about. I appreciate all of you. I will continue to make these videos as I'm enjoying it quite thoroughly. There's some really cool people in the community that I love engaging with. Especially lots of you guys in the comments as well. I do see them, I do read them, and I do respond to most of them. So if you are enjoying them, please think about leaving likes, comments, and subscribing to help grow this channel. One of the other things I wanted to touch on was a new and up-and-coming project. I believe Matt's covered this previously on his channel, but NFT WORLDS. So 10,000 virtual worlds living on the Ethereum blockchain. Not the biggest fan of Ethereum in general, but NFT WORLDS being new to the space and leveraging the fact that it's Minecraft compatible, which is obviously a massively multiplayer experience. These developer APIs, decentralized and more. They have a few features as well to limit the impact of the gas fee transactions on Ethereum. And not only that as well, we've seen this massive explosion in these sandbox environments. Obviously, you've got the token Sandbox, you've got other metaverse and gaming plays like 𝗟𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦, 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗜𝗍, etc. So this is a big project and has a lot of potential to become massive and compete with projects like Sandbox and 𝗟𝗘𝗙𝗥𝗥𝗔𝗟𝗦, etc. in the gaming / metaverse space. Really, really cool. If we look at the tokenomics, like I said, one of my main concerns with the tokenomics of this project anyway was the in-game transactions, naturally it being on Ethereum. As the project begins to scale, the gas fees could be fairly costly and prevent it from expanding further. However, they do have this sort of gasless in-game transaction system they use, which has two different networks, primary being Ethereum and the secondary network in-game transactions occurring on Polygon, which is far cheaper. Not only that, they have also reduced the transactions from 1 world fee down to 0.1 world fee, so effectively a 1/10 of the original transaction fee, which is fantastic for their expansion, and it means they are genuinely serious about this project continuing to grow. Not only that, there are other features as part of their tokenomics and distribution plans, for example, staking. So 35% of the world tokens will be locked up and distributed over a 5-year target timeline. You do not need to stake a world token for 5 years. We're saying that in total, reserves will be targeted to be depleted around the 5-year mark for when staking starts. So there is staking coming in the future. Obviously, there's some team reserves and some other things. Not only that as well, there's play to earn rewards. So again, this is something that we've seen become very popular over the last few weeks and months. These play to earn reward types of games like 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 are incredibly popular and they resonate really well with the younger generations that are heavily involved in the crypto space. So as I've said before, this kind of blends projects like 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 with other projects like Sandbox to have this massively online multiplayer experience where you've got these worlds and land parcels where you can effectively earn money or income from. So really big stuff there. Touching on this as well, like I said, reduce the transaction fees, which is great anyway for the expansion of the project. One of the things that really entices me and sort of gets me going about this project is that it's built on top of Minecraft. Now, Minecraft is the best-selling video game of all time. Hands down, it has the most concurrent players, the biggest user base. It appeals to a very wide demographic, from the very young to the sort of older edge of the gaming spectrum, effectively. And as well as unit sales. I mean, the game has been growing and expanding ever since it released back in 2011. Obviously, the previous developer was Mojang. Ever since then, it got bought out by Xbox or Microsoft. So this is a big project built on top of a Microsoft platform. The potential for this is enormous. If I flick over as well and we look at the current price of it, so obviously I'm based in the UK, but 0.4 pence. 4.4 pounds or 40p a token at the moment, and the current rank as well is sub 3,000 on CoinMarketCap rankings. So I think it'd be something like a 50, 55, 56x if it gets anywhere near Sandbox's market cap. Massive potential here for this project, and one that I would probably think everyone should keep an eye on. Of course, not financial advice, do your own research. Projects like this are inherently risky, and there is a chance that everything could go pear-shaped. However, this looks to be a big opportunity. Some other news as well from the Daily Hodl. So Morgan Stanley has issued Ethereum warning, saying Ethereum may lose market share to faster or cheaper challengers in the space. Something that we are all painfully aware of, I think, that Ethereum is currently holding the number 2 spot. However, it may not sustain that into the future. There is still the proof of work transition happening or coming sort of middle of this year to move to proof of stake. But as we've all seen, Ethereum faces more competition in the smart contract market than Bitcoin faces in the store of value market. Ethereum may lose smart contract platform market share to faster or cheaper alternatives. They do list some prominent Ethereum alternatives: AVAX, Sol, ADA, Luna, DOT, and Algo. The elephant in the room effectively is obviously HBAR or hedera. There is massive potential for hedera to take the crown of the king of layer ones effectively, and it's something that I do foresee happening in the short to near future, especially as the project continues to ramp up, use cases come on board. The efficiency of the network in general just far outstrips any other layer one that's currently available. Interesting warning here anyway. Some more news as well on the Ripple and XRP case. Whether or not you guys are invested in XRP or Ripple, or actually even follow or like the project, what they are doing by fighting the SEC is massive for the crypto space in general. What we do not want to see happen is them to lose the case, and then it sets a precedent for the rest of the projects that come through in the space to come under regulatory fire immediately, which shuts them down before they can even begin to grow. So effectively, XRP are doing the profits work in this sense. What's positive here is that there are some unsealed documents from 2012. So 2 legal opinions from Perkins Coie LLC became public as a result of a recent court ruling. The first of the 2 documents was in relation to NewCoin, and the second to Ripple Network or OpenCoin. So regulars, what these effectively say is that Perkins concluded that coins may become commodities should contracts for future delivery of coins be developed. They will likely be classified as commodities under the Commodities Exchange Act rather than securities. Regulators could also treat exchanges as money transmitters or currency exchanges. This is really big anyway in terms of the case, because it shows that Ripple or XRP had the foresight several years ago to seek legal advice. So it even says here, Ripple had the foresight to seek legal advice from a prominent firm in 2012 in the absence of clear case law, and 5 years before the SEC even started talking about digital assets. This should be applauded, says Stuart Alderoti. Really big anyway in terms of the XRP SEC case, as it still bats back and forth. I expect we'll see a close to this case hopefully in the end of 2022, unless there are any other sort of meandering paths that it goes down. But it's looking bright for Ripple and the crypto markets in general, as the SEC is beginning to run out of ammunition to fight back against this case, which is fantastic for market adoption in general. The other thing as well, good news for XRP, as a mega whale has just scooped up over $700 million in the second biggest accumulation spree in history. So-called mega whales have accumulated over $712 million worth of XRP tokens since December 2021. 76% spike in XRP mega whale addresses since December 2021 has been noted by analytics firm Sandbox, showing that they have added a total of 897 million tokens as of February the 18th to their reserves. So again, this is fantastically bullish for XRP holders, as we're seeing mega whales pick up, the old saying, effectively follow smart money. Clearly there is some smart money to the tune of nearly $1 billion that is flowing into XRP and picking up these tokens. Potentially as well, they have some additional news on how the case is going to go, or they have a gut feeling that XRP or Ripple will win this case, and there will be an absolutely massive price explosion for XRP as it comes out the other side of this case. Anyway, guys, that was the video, a bit longer than normal. I have been trying to keep these videos as short as possible. As I mentioned previously, if you are enjoying these videos, please leave a like, a comment. Please think about subscribing, and we'll continue to grow this channel. Follow me over on Twitter as well to keep up to date with the latest news. Anyway, guys, thanks for watching. I'll speak to you all soon. Cheers.